Next story that I want to talk about is NVIDIA. And you know what we should do? We should actually start with the NVIDIA chart. Let's do that. Let's go ahead. Let's go back to Pro. Let's go to the NVIDIA chart here. This is where we're at. And I think that this is actually at a pretty interesting area. NVIDIA 187.15 here in the pre-market. Let's see. That's basically right at, it's 20 cents below the 50-day moving average. So we did break the downtrend. Now we kind of broke the downtrend line by trading sideways. We'd rather see the stock price move up significantly through that price. We didn't do that. We kind of just traded sideways, but we did ride along the 100-day. Yesterday, we recaptured and closed above the 20-day, which is great, although that's basically stacked right beneath the 50 here. We tested the 50. We were rejected by the 50. We should have another go at it today. We're only 20 cents beneath that here today. And then furthermore, looking at today, I would give about 192-ish for the trend line that originates back on September 5th. There's an upward sloping trend line. A recapture of this probably puts the double top that's up here around 212 in play. Now, as far as the news affecting all of this, we just told you that they're going to allow the H200 chips to be sold to China, with the America taking, I believe, 25%. Beijing, however, is reportedly planning to restrict access to NVIDIA's advanced H200 chips, despite the green light from Trump for their exports to China. Beijing is working on limiting access to NVIDIA's H200 chips, the company's second best generation of artificial intelligence chips. That was reported by the Financial Times. Chinese regulators are reporting weighing limited access to the chips, requiring potential buyers to obtain approval before purchasing. These buyers would have to justify why they cannot meet their chip needs through domestic providers. No final decision has been reached yet, according to a report which cites sources familiar with the matter. Beijing has used this ban to encourage domestic chip makers to develop products to compete with NVIDIA. The Chinese government has also increased custom checks on chip imports and offered energy subsidies to data centers that use the domestic chips. The news of Beijing's plan to restrict access to NVIDIA's H200 chips comes after Trump's announcement on Monday, or the H200 chip export approval sparked a surge in shares of the U.S. chip makers, including AMD, which closed 1.44% higher at 221.11. Notably, Trump also mentioned President Xi responded positively. They even threw in an exclamation point for those of you that are counting those. However, this was followed by the arrest of 2 Chinese nationals for allegedly smuggling NVIDIA chips into China in violation of the U.S. export controls. In recent months, Chinese regulators have intensified efforts to curb reliance on foreign AI chips, reportedly banning NVIDIA and other imported processors from new state-funded data center projects and requiring projects still early in construction to replace them entirely. Customs authorities also tightened checks on semiconductor imports, showing large-scale GPU shipments. At the same time, China is accelerating domestic chip production, aiming to triple AI chip output by 2026 and build a fully self-sufficient tech stack. So, okay. We'll see how that all shakes out here. I actually am expecting, I think if the market holds together here, NVIDIA might actually make a pretty decent trade here today. We'll see how all of that shakes out. All right, next story here. Cathie Wood has some positive news for 2026, or I guess I shouldn't say positive news, positive outlook, I would say. ARK Invest CEO Cathie Wood is forecasting a historic economic boom driven by the incoming administration's fiscal policies, describing the landscape as, quote, Reaganomics on steroids, end quote. In a recent update to investors, Wood argued that the combination of aggressive tax cuts and deregulation under President Trump will create a more powerful growth engine than the 1980s era of supply-side economics. Wood's optimism centers on the legislative package she refers to as OB3, which is the One Big Beautiful Bill. According to Wood, the bill's smartest feature is making tax cuts retroactive rather than phasing them in, a lesson learned from the delays that slowed the initial impact of Ronald Reagan's policies. Quote, we think this is Reaganomics on steroids, end quote, highlighting, that came from Cathie Woods, highlighting a specific provision such as the elimination of taxes on tips and overtime pay and a reduction in taxes on Social Security benefits. She also noted that doubling the SALT, the state and local tax deduction cap from $10,000 to $20,000, which offers significant relief, to residents in high tax states. The potential impact on consumer wallets is substantial. Citing data from Piper Sandler, Wood projected that the proposed tax relief, real disposable personal income, money available after inflation, could grow at an annualized rate of roughly 8% in the coming quarters. This dovetails with President Trump's Thanksgiving comments to U.S. service members, where he hinted that massive tariff revenues could allow the U.S. to substantially cut or even eliminate federal income tax. Wood confirmed that the budget deficit is already shrinking, attributing roughly 2/3 of the $350 billion reduction to tariff inflows. Wood believes these fiscal injections are arriving just as the economy transitions from a rolling recession to a rolling recovery. While acknowledging weak employment numbers, she argues that increased liquidity and the OB3, I'll just use her parlance, the OB3 will fuel a market swish into the end of the year, setting the stage for a prosperous 2026. Now, I do think that we're going to get this move into the end of the year. I would not be shocked at all if SPY printed 700 and the S&P printed 7,000. It seems like there are just so many targets. We actually have options that are kind of showing that that's going to be the next move here. We'll see if it all shakes out. The one thing that I will say, I agree a lot with what Kathy is saying here, but the one thing that I will say is I do think we are going to see a pullback sometime in 2026. I don't know if it's going to be early in 2026 or if it's maybe going to wait out the first quarter or something like that. We've talked about valuations being high, and even with some of the good news, I actually think a down move in the market to kind of alleviate some of the fears of being overpriced and such would actually make for some pretty good entry into some of these names. And if you get the tailwinds that Kathy is talking about here, that could be a prosperous 2026. But again, and this is another discussion that we have often in happy hour, we want to wait for a pullback to make these additions. We kind of all think that there is one coming. I know that's a dangerous game because when you're waiting for the pullback, that's when it won't show up, and that's when you'll be left sitting on the sidelines. But I think 2026 is going to be interesting. I do think, at least for right now, I don't think that we necessarily have to worry about a huge pullback for the rest of the year. Now, I'm not making a huge call here. It's December 9th. There's 30 days in December, 31 days in December, 31 days in December. So we've got one full week. Then we have the Christmas week, and then we have the week that's truncated by New Year's. So I don't really think we're going to see a pullback here by the end of the year. I'm hoping that we get more of this kind of active trading that we've all been taking advantage of as we wrap up 2025. But even with a lot of positives on the in front of us in 2026, I still think we're going to see a market move down, and that would actually, again, I think, represent a buying opportunity.